Next up, the chief executive of General Motors is feeling the pressure on Capitol Hill.
She is indeed, Mark. General Motors and Mary Barra are grappling with a recall crisis, and she's appeared ahead of a congressional committee to face questions over a technical problem with the ignition switch in some GM models. The issue has been linked to at least 13 deaths. The car maker launched a recall of 1.6 million cars back in February, as you may remember, but it's been revealed that GM knew about the issue much earlier without taking action. Ahead of Barra's testimony, families of the victims gathered in front of the US Congress. They want to know why GM didn't take action sooner and also why the US government didn't intervene. Mary Barra has announced the hiring of a disaster response expert to deal with the crisis fallout, and she's also apologized to the victims' families. Let's listen in.
Sitting here today, I cannot tell you why it took so long for a safety defect to be announced for this program, but I can tell you we will find out. While I cannot turn back the clock, as soon as I learned about the problem, we acted without hesitation. I would like this committee to know that all of our GM employees and I are determined to set a new standard.
A few excerpts there of Mary Barra's testimony on Capitol Hill. Shares in General Motors traded down slightly on Tuesday and ended 0.25% down over on Wall Street as Mary Barra's testimony proceeded. That wasn't indicative for the wider stock markets, as you can see right here, though. Shares on Wall Street ended in positive territory for a third consecutive day. A report shows that US manufacturing grew at a quicker pace in March, and that boosted stocks. The Nasdaq up 1.6%, a pretty impressive performance there by that index. European indices also ended with gains. The CAC 40 here in Paris, for instance, closed at its highest level since September 2008. Car shares did particularly well in Paris on the news of higher car sales in France in March. Now, here in Europe, investors have also been digesting a string of reports on the health of the Eurozone's economy. Unemployment in the Eurozone held steady in February at 11.9% of the labour force. The European Union Statistics Service says the rate has been stable since October last year, and it's marginally lower than in February 2013. But it's still highlighting that hiring is not getting off the ground in a major fashion in the 18 countries that use the euro. Meanwhile, the private sector in the Eurozone continued to grow for a ninth consecutive month in March. A measure of private sector activity from research firm Market came in at 53. That's a slight slowdown from February, but the reading is still above the key 50 threshold, which signals that the private sector is growing. We're going to change gears now. Ukraine is facing higher energy bills. This is Russia's Gazprom has announced that it's hiking natural gas prices for Ukraine by more than 40%. It's likely to put further strains on the country's already strained finances. Delona D'Souza has more.
It's the latest blow to an economy already in crisis. The price of gas Ukraine imports from Russia's Gazprom has shot up by over 40%. State energy company Naftogaz will now have to pay $385.50 for 1,000 cubic meters of gas, up from the discounted price of $268.50. In December, Russia agreed to offer Ukraine a quarterly discount in gas exports, along with its financial bailout offer. With Ukraine's then-President Viktor Yanukovych now deposed and Crimea annexed to Russia, that discount is off the table. Gazprom CEO has justified the price increase. The company claims Ukraine owes it $1.7 billion in unpaid gas bills. This latest development will likely place a weak economy under further pressure, hitting households the hardest.
Currently, Ukrainian economy is not doing very well, and of course, given that the country depends heavily on Russian gas, price increases are going to affect the country quite dramatically.
Ukraine's parliament has already approved a 50% increase in the price of gas from the 1st of May. Utility companies are also set to see a 40% increase in tariffs from the 1st of July, costs likely to be passed on to consumers. Ukraine has been promised a bailout package of $27 billion from international partners. This includes $14 to $18 billion from the IMF, and it's expected to cushion the latest blow to the country's economy. Ukraine has been working on ways to cut its dependence on Russian gas, which currently meets over half its consumption.
Okay, an already difficult seat there for Ukraine just got a little bit more difficult. And with that, I'm going to be wrapping up the business news.